the truth about IPOs, also known as initial public offerings. What up? You got Mr. Smith, point five of Mr. and Mrs. Smith, and in this brief video, I want to talk to you about the truth about IPOs or initial public offerings. In 2020, has been a lot of companies that have been coming to public offering, basically allowing their stocks or shares in their company to be purchased by the public market. Now, a lot of people get excited when they see that they can now invest in a company that they've been knowing about. And typically, when companies were offered in the initial public offering, it was companies that you didn't necessarily know a lot about. They didn't have a lot of popularity as much as some of the companies that are entering into being offered to the public now. So what does that mean? If you didn't know them as much, then the valuation for their company was tending to be a little lower. And if the valuation of the company is a little lower, then what that does is allow people who invest in it when it first comes out to position themselves to get a higher profit margin because it was valued at a decently low amount compared to what it could grow to. And then what happens is you invest in it at that amount, that initial public offering, the chances of it growing heightens because it has nowhere near reached its full potential. But when certain companies enter into the market as a IPO, if it's already a well-known company, that allows that company to come in at a higher valuation, which means that it's a chance that if you invest right at the IPO date, the initial public offering, around that first 30 days to 90 days, is a good chance you might lose money or you might not buy at the best price. Because you want to figure out a way to not only lower fees and things of that nature, but also see if you can buy when it's at a low. Because it's the name of the game is like business. Buy low, sell high. So if you buy low, you get the benefit more from the growth of that company. And a lot of the companies that get entered into the IPO status might not be the best bet. For example, a lot of people bought into Snapchat when it first became an IPO. And at the beginning, they lost a decent amount of money. Not sure where they are now in terms of the cost price or things of that nature, but that's just an example. So many people were excited. They're like, yeah, I'm buying Snapchat and buying Snapchat. They put a certain amount of money in, and guess what? They lost money because they didn't buy right. But had they waited until that drop and bought then, and then when the price hit what it initially got offered at, they would have made money right there. So sometimes it's safe to wait because this is what you have to understand about the IPO. There's three stages, and I'm gonna just keep it simple. Three main stages. You got pre-IPO, you got the actual IPO, then you have the post IPO. Pre means before, post means after. So the pre-IPO is where a lot of the qualified investors, it's another word, accredited investors get their chance to purchase and buy exit or buy ownership of that particular company, a certain amount of shares. Now, when that's happening, for one, as a accredited investor, you either have to have $1 million net worth or you have to earn over $250,000 per year. And if you're married, like over 300,000, and that's subject to change, but that's just an example. So a lot of people may not be accredited investors, which means that they're not able to participate in the pre-IPO. But the pre-IPO is where they make their money because they're able to buy it at a fraction of what the public is going to get access to it for. Now, they said that the accredited investor was set up to protect consumers from losing money, and that could be. But more than likely, it positions the wealthy to stay wealthy because it protects them so they can get in on it at a low price. And then when it's IPO time and everybody is excited to buy in, they're making 3 times the money because they bought in at a low amount. Sometimes even more than 3 times. Could be double, could be quadruple, could be more than that. So keep that in mind. It's somebody else who already has ownership in it. So they're selling it to you at a higher cost. Not that it's always a bad deal. I'm not here to tell you that. But in many cases, it's not a great deal. And if you can wait for it to drop, then it's a good chance that you can heighten your return on your investment because you didn't do it at the IPO. See, the pre-IPO, the people who bought into that, they're going to make a lot of money when the IPOs, or they might hold on to it long enough to make a maximum amount of money. But if you wait into the post-IPO time frame, meaning after the initial public offering, whatever that time may be, that may be a month later, maybe 3 months, maybe 6 months, who knows? But if you see that it dropped a decent amount, then you buy into it, then it's a good chance that you will be in a better position than the people who just jumped on it right when it came out. Now, it's different for different scenarios. So, of course, I'm not a financial advisor. I don't have a Series 6, 7, but I did a little studying and paying attention to certain things to be able to see that many times when people buy in at the IPO, they lose money. But sometimes you can, make money. So I'm not here to tell you what to do. But a couple of the ones that are being introduced in IPO status are, Airbnb. That's a very popular one. So there's a lot of people that's excited to jump in at the IPO. Wish, that company, the company that sells different things, the wish list, I'm sure you've seen a Wish ad. They're going public. So it may be looking good to buy into it, but don't be alarmed as if you buy into it and it drops, because it has the chance to do that. But if you wait a little bit, it might be a chance that you can buy in at a better price point because you went post-IPO. You waited for all the excitement to die down, because people are going to be excited on the front, excited, then it's going to drop, and that's when you buy. When it drops, you cop. In so many words. So hopefully that helps. That's the truth about IPOs. Typically, when you first buy into it, when it was just being released, it's not necessarily the best time statistically. But when you wait a little bit, it's a good chance that you can make a better profit. And what I want to do is, hopefully I don't forget, because I'm not sure when I'm going to post this video, I want to link to a video where a gentleman who's, astute in finances and things of that nature breaks down how you can kind of judge when is a decent time to buy into an IPO, if it's a good idea. And he understands pretty much what I just said too, as it relates to he didn't use the terminology pre-IPO, post-IPO. I just wanted to simplify. He said some different terminology that, might throw you off if you don't know what he's talking about. But hopefully after watching this video, you at least have an understanding. And if you decide that you want to watch that video, hopefully I'll link to it below. If you don't see it below, type in the comments, say, hey, can you share that video with me that shows how to go about gauging whether or not it's a good IPO or good to buy an IPO based on this particular formula. That's all I got for this video. Hope that made sense. Hope you got value. If so, please hit that thumbs up button. Share it with somebody you feel may benefit. Subscribe and hit that bell notification. And also, go ahead and click on some of those available links. We got some free goodies down there that can help you in terms of getting access to a membership that can teach you financial literacy if you don't have an understanding of money. And this is a good resource of where I learned pre-IPO, post-IPO, IPO, and different terminology as it relates to investing. And I think it'll be a good vehicle for you because it heightens your education level financially, but at the same time, it helps you save money because we show you how to shift some of your hard-earned money from people who have been taking it. That's taxes, that's overpaying the interest, that's overpaying for travel, things of that nature. You can get access to all of that by clicking that link below. That's all I got for this video. Mr. Smith signing out.